What's up everybody, I'm Jaspreet Singh, and yesterday when I was in the gym, a couple of the crypto bros started talking to me about how they're trying to trade cryptocurrency right now through the war and through all the regulations that are coming in cryptocurrency, and it made me so unbelievably nervous. Cryptocurrency, like any other financial asset, but let me focus on cryptocurrency, is not linearly correlated with any one thing. It's not like if we see a war happen, the cryptocurrency is going to go up, or that if inflation happens, cryptocurrency is guaranteed to go up. There are a lot of different things happening at the exact same time, and they all influence cryptocurrency and Bitcoin in different ways. See, I think most people, especially newer traders or investors, they have the idea that if this, and this happens, the investment that I want to make is guaranteed to go up. But what you have to understand is that we are living in a chess match right now, where especially in cryptocurrency, it's not just a few factors. There's so many different factors happening at the exact same time, which are going to influence the price of cryptocurrency in the short term and the long term. And so if you are a fundamental long-term investor, that means fundamentals, right? If you are a fundamental long-term investor, you should not be trying to isolate a couple of these data points and then trying to figure out what to do with your money for the next 3 months or the next 6 months. You want to understand what it is that you want to own for the long term and come up with a system and strategy to buy that. Right now, we're dealing with a lot of different things going on. We have worries about the United States potentially going into another recession. We have talks about new regulations coming into the cryptocurrency market. We have more and more concerns about the dollar potentially losing its reserve status in the world, and the Fed is now finally starting to fight inflation. This is why it's like a chess game. You're not just looking at one or two different factors. You have so many different things coming together where you have to understand how each individual thing is going to affect cryptocurrency, and you can't just look at it in a little bubble. There's so many different things happening, which is why you don't want to be a trader trying to just time the market, because now you're gambling. There are so many things happening around you, and you do not want to be one of those people that's trying to time the market, because if you are wrong, you're going to be the one paying the price. Now, of course, you're never guaranteed to make money when you invest, which is why you should never blindly listen to a random guy on YouTube, but you're much more likely to make money if you're fundamentally investing your money into something for the long term, because now you're not just looking for a quick pop based off of something happening in the world. Now you're investing based off of the fundamentals, and you're giving your investment time to grow and allow it to make you more money over time. So my warning is really not to get emotional with your money. You have to understand, if you are an investor, that you should be fundamentally investing your money for the long term. If you see a big crash, that's an opportunity for you to buy. If you see things go up, well, if you're dollar cost averaging, you just keep averaging your buys. That way you continue buying whether things are up or down. That way you're not trying to pinpoint what's going to happen in the market based off of just one thing, and then if you're right, you hit it big, and if you're wrong, well, now you lose a big chunk of your portfolio. You can avoid all that stress, you can avoid all that headache by just being a fundamental investor. And what I want to do today is talk about 4 different things and how they are going to impact the cryptocurrency market, that we can understand that there's a lot of different things happening at the exact same time, which is what makes it so hard to try to predict what's going to happen tomorrow or next week or next month. I'm going to start by talking about everything going on overseas, then I'm going to talk about what's going on with our economy, then I'm going to go into China and how that's influencing cryptocurrency, and then I'm going to talk about inflation and what the Fed is doing. So let me start here by talking about what's going on overseas. Wars are never a good thing, but there's a lot of education that you can get out of wars, and one of the things that we saw happen is we saw a lot of legitimacy come out of this war between Russia and Ukraine, because as soon as Russia invaded Ukraine, we saw Ukraine open up their country to cryptocurrency donations. So that was how it started, and it gained a lot of publicity, and Ukraine saw millions of dollars of donations coming in the form of cryptocurrency. But the problem was, cryptocurrency wasn't legalized in Ukraine at the time. It wasn't until Ukraine received something like $100 million worth of donations in the form of cryptocurrency that the president of Ukraine then signed a virtual assets bill which legalized cryptocurrency in Ukraine. So what that did is it legalized cryptocurrency exchanges in Ukraine, and it allowed banks to now work with cryptocurrency, because now banks could open up accounts with cryptocurrency exchanges for people. This showed a real world use case of cryptocurrency, because it made it very easy for people to transfer money from one part of the world to the other part of the world without having to deal with all the traditional friction of moving money through banks. But you also have to pay attention to what's going on with number 2, which is the economy. Now, everything I talk about with the economy, with China and inflation, they're all going to tie into one another, but I'm going to try to break it down into different pieces that we can understand how they all affect cryptocurrency in different ways. There's 2 things that I want to talk about with the economy. The first is the actual economy itself, because we already know that inflation is running crazy in the United States, and across the world. I'll talk more about inflation in number 4 when I talk about the Fed. But this inflation that we're seeing is causing a slowdown in the economy because people just have less money to spend. When the price of everything from your rent to your groceries to your gas costs 2 times more now than what it did before, well, you're naturally gonna be able to spend less money on things that you want, which means companies are gonna be making less money because, well, you're just shopping less because you have less money to spend. That's not so good news for cryptocurrency because cryptocurrency depends on supply and demand. When you have more buyers entering the cryptocurrency market, that helps to push the cryptocurrency prices higher. Well, if people are struggling to pay their rent or people are struggling to pay their groceries, they're not going to have money to go out and buy cryptocurrency, right? So if the economy is slowing, people are then strapped for cash, which means people have less money to go out and invest into assets, including cryptocurrency, which is not good for asset prices in the short term. Our government is taking cryptocurrency much more seriously now than they did even just a few months ago because of everything that I've been talking about. Part of the reason is because the war between Russia and Ukraine. Part of the reason has to do with China, and part of the reason probably has to do with inflation. So President Biden came out with an executive order where he talked about how he wants to start regulating cryptocurrencies ASAP. He also talked about how he potentially wants to launch a digital United States dollar, and the SEC is also going out and starting to impose their own regulations on cryptocurrency. Now, these regulations can be good or bad depending on how strict or severe they are. Generally, when we talk about business regulations make it harder to do business, which make it more difficult for new companies to be created, which make it more difficult to create more competition, which makes it harder for your company to survive and thrive. But in the cryptocurrency case, it's a little bit different because cryptocurrency is such a new asset class, and you have some of the bigger companies out there that are asking for regulations. Now, there's a couple reasons why they could be asking for regulations. One of the reasons why they could be asking for regulations is to limit competition, because if a company is already big in cryptocurrency and now you have new regulations that come out, well, it's going to be harder for a new cryptocurrency startup to then gain some market share because now they have to jump through all the regulatory hurdles. The second thing that you have to pay attention to when it comes to regulations is we are working in a lot of gray area with cryptocurrency, because sometimes you can be a cryptocurrency company that's operating and then you get slapped with a fine because the SEC says that you're doing something that they don't like, and you don't know that because there's not a lot of real guidance as to what the government thinks of cryptocurrency. So there's a fine line between how much regulation is good and how much regulation is bad, especially when it comes to cryptocurrency. And the worry now is that if the government comes out and they start over-regulating, well, that's going to hurt the innovation side and the growth side of cryptocurrency in the United States. But President Biden says that he wants the United States to be a leader when it comes to digital assets. So they're going to have to really find a way to regulate cryptocurrency in a way that's not going to hurt innovation. Now, that's a pretty big ask. It's not easy to create regulation that's not going to hurt innovation. So we have to pay attention to what they're going to do when it comes to innovation. And you also have to pay attention to the digital dollar. So on one hand, regulation would hurt cryptocurrency. We've seen this happen time and time again. Anytime you see countries around the world start to create their own regulations on cryptocurrency, that hurts the prices of cryptocurrency. But on the flip side, then you have a potential United States dollar, which would even more legitimize digital assets and cryptocurrency, which would definitely help cryptocurrency. This is why you don't want to be in the business of trying to time the market, because there's so many different factors. You have the war going on, which is helping the legitimacy of cryptocurrency. Then you have the economy potentially slowing, which is bad for cryptocurrency. And then you have more regulations coming, which is bad for cryptocurrency. But then you have the United States potentially creating a digital dollar, which is good for cryptocurrency. This is why instead of trying to perfectly time the market, I talk about just creating a dollar cost average system. That's what I have, where every day I'm just buying some Bitcoin and buying some Ethereum and I'm buying some of the smaller coins that I like. Again, you got to figure out what's the best strategy for you. You should never blindly follow a random guy on YouTube. But when you do a dollar cost average system, now what I do is every single day I'm just buying a little bit of Bitcoin, I'm buying a little bit of Ethereum. That way now I'm just averaging my cost in Bitcoin and Ethereum. My biggest cryptocurrency investment is in Bitcoin, but now I'm not trying to perfectly time the market. I know that there's going to be big swings in cryptocurrency all the time, and so now when I do this dollar cost average system, if the prices go down, I continue buying. If it goes up, I still keep buying. So my cost gets averaged out, and if we see a major cryptocurrency crash, well, then I can just come in and buy more. But I understand how cryptocurrency plays a part in my portfolio. And then within the cryptocurrency slice of my investment portfolio, I understand that I have Bitcoin, Ethereum, and a couple of the smaller coins, which I'm now just dollar cost averaging. And if you're looking for an easy and cost-effective effective way to purchase cryptocurrency, you can check out our sponsor FTX. They're one of the largest cryptocurrency exchanges in the world, and they make it easy for you to buy and trade cryptocurrencies, NFTs, and currencies. There are two reasons why I like FTX. One is because they made it super simple for you to get involved with cryptocurrency. All you have to do is download the app. Once you have the app, it's literally just a few clicks of a button. You can pick whichever cryptocurrency you want to buy. It is so easy to use, probably one of the easiest platforms that I've seen when it comes to cryptocurrency. And if you want to set up an automatic buy so you have this dollar cost average system, it's super simple. You can do it right on the app. When you click the buy button, you can just say that you want to do the dollar cost average, and then you can pick how often you want to buy the cryptocurrency, and you're done. It's literally just a few clicks of a button. And the second reason why I like FTX is because it's cost effective. If you set up a dollar cost average system, you're going to be buying cryptocurrency multiple times. Well, every time you buy cryptocurrency, you're going to have to pay a commission. And some of the other exchanges out there are going to charge you a lot of money in fees. So if you're buying a little bit of Bitcoin or whatever coin you are every single day, a big chunk of that is going to be going to fees instead of actually buying you the cryptocurrency that you want to own. Versus with FTX, they have a lot lower fees, which allow you to own more of the cryptocurrency instead of just paying all of your money in commissions. Plus, with all the changes and regulations going on, FTX US is regulated, and they have a whole page on their website where they go over their regulations and their licenses. So if you want to check that out, you can check it out on their website. Plus, they have some cool perks like giving away free cryptocurrency from time to time. So if you want to learn more about FTX, see how you can get started, and see how you can start dollar cost averaging your investments in cryptocurrency, I'll put the link to where you can learn more with FTX down in the description below. Minority Mindset is a paid partner with FTX, so if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and see how you can start investing in cryptocurrency with FTX, I'll put the link to where you can do that down in the description below. The third thing that you want to pay attention to is China. So not too long ago, I put out a video talking about the changing world order. There's a video where I talked about Ray Dalio's thesis of how the United States is in decline and how we could potentially lose our status as the world's reserve currency if we continue in this decline. Well, not too long after I posted that video, Saudi Arabia came out and they said that they were thinking about selling their oil to China not through dollars, but through the Chinese currency. That's bad news for the United States. And you might be wondering, why does it matter what Saudi Arabia is selling oil to China at? Why do we care if they use dollars or not? Well, we have something called the petrodollar. Now, this might sound a little weird and a little crazy, but the United States has an agreement that if oil is going to be sold to certain countries, they have to use dollars, because that also helps maintain the dollar as the world's reserve currency. So it's almost like a status booster that you have to use dollars if you want to buy oil. Well, if Saudi Arabia decided to sell oil not through dollars, but through a different currency, in this case the Chinese currency, well, that would almost be like a kick in the butt of a dollar. This is something that you definitely want to keep your eye on, especially over time, because the United States has been kind of in this decline phase, while China has been in this really fast growth phase. So there's been a lot of tension between the United States and China, not just because of the regular geopolitical stuff going on, but because the United States is scared of China potentially catching up in terms of the economy, in terms of its growth, in terms of its innovation. And then you can couple that with all the tensions that we're seeing between Russia and Ukraine, and you start to paint a picture where China might be building some animosity to the United States, while China and Russia are still kind of friends. And so if China were to get involved in this war somehow, maybe China helped Russia more, or maybe China went out and they invaded Taiwan, or if there's more involvement of China in this war, well, then that could pull the United States into this mess, and that could cause a whole lot of other issues, especially considering that the United States dollar has been losing its power recently. And this is one of the reasons why President Biden has been meeting with China, talking about China's growth, talking about the competition between the United States and China to see how the United States can keep their place as the world superpower. But this is something that you want to keep your eye on, because if we continue to see super high inflation in the United States, and I'm going to talk more about that in just a second, but if the United States dollar continues to lose value, well, then people are going to start to look for an alternative with their money. Because if your dollar loses its place as the world's reserve currency, well, it's going to become weaker. And if your dollar becomes weaker, that means your dollar is going to have less buying power, so people are going to want to look for an alternative. One might be physical gold, one might be putting more money into stocks, one might be owning real estate, and another one might be cryptocurrency. So this, while it's horrible news for the economy, it's horrible news for the United States, it might be a good thing for cryptocurrency, especially in the United States, because that could push more United States buyers into cryptocurrency. But this is something that you want to keep your eye on. And this brings me to the topic that I've been talking about for about 2 years now. Inflation. I first started talking about inflation as soon as we saw the first round of stimulus checks going out, talking about how inflation is going to get worse because of all the money printing that we're seeing happen. Now, in the beginning in 2020, nobody thought that we would be seeing the inflation that we have now. I mean, unless you were watching this channel, but most people did not think that inflation would actually become a problem. Well, here we are today where inflation is a problem and all this money printing has caused a whole bunch of supply chain issues. And now in 2022, the Federal Reserve Bank has finally decided to take some action to start fighting inflation. The Federal Reserve Bank hiked interest rates for the first time in years in March of 2022 as a way to start fighting inflation. But the problem is, the Fed isn't really fighting inflation. I mean, they barely hiked interest rates. Before the March interest rate hike, the Fed said that they planned on hiking interest rates by 0.5%, but then they came out and they only hiked interest rates by 0.25%. So if the Fed keeps saying that inflation is really bad, it's a major problem, why are they not taking more severe action? Well, the reason why they're not taking more severe action is because if the Fed really started to drastically increase interest rates to fight inflation, it's going to cause an effect on the economy. Because when you drastically raise interest rates, it becomes more expensive to borrow money, which hurts the economy, which then would cause an even bigger recession. So the Fed is trying to balance a recession and inflation at the same time, and by doing that, they're not really fighting inflation and they're also not really preventing a recession. However, on the flip side, the Fed did say that they plan on hiking interest rates a number of times in 2022, which I don't think a lot of people expected the Fed to say that, but this is something that you want to keep your eye on because what the Fed says and what the Fed does are two completely different things. And so if the Fed takes a strong stance on inflation and they really start hiking up interest rates, well, that's going to put a slowdown in the economy, and we already talked about what that means for cryptocurrency and the economy in general. If we start to see a massive slowdown in the economy, people have less money, they have less money to spend, they're going to have less money to invest. But if the Fed feels like they need to ease off of what they're doing because they're worried about what's going to happen to the economy if they continue to ramp up interest rates, well, then that's going to cause even more inflation. And if we see more inflation, then people are going to look for more inflationary hedges. That means they're going to put more money into what I just talked about: gold, stocks, real estate, and cryptocurrency. So you have to understand, depending on what happens, it could be good or bad for cryptocurrency. In general, inflation is a good thing for cryptocurrency because people are going to look for an alternative to keeping their money in cash. And so this is something that you have to pay attention to. And although we hear what the Fed wants to do, we don't know what the Fed is going to actually do until they actually do it. If you enjoyed this video, here's a video on the New World Order that I think you'll love. And if you want to join my free financial newsletter, Market Briefs, all you got to do is click that button below. Thank you for watching, and as always, keep hustling. The changing world order. What causes different world orders to change in the past and why this is going to change our new world order? Then